Russia's presidential advisor Anton Kovikov said, and I quote, "The US is now trying to rewrite the rules of the gold and cryptocurrency market." Think about that for a moment. $37 trillion supposedly being reset through gold and cryptocurrency market. This isn't coming from a blogger or a Twitter thread, right? This is coming directly from an official speaking on a global stage. Now, here's where the story gets even more interesting. While this claim is being broadcast internationally, back here in the United States, the Federal Reserve announced its first interest rate cut of 2025. Markets reacted instantly, stocks surged, indexes hit a record high, and financial headlines lit up across major outlets. So, what is being said by Russia, coupled by what is going on in the US currently, such as monetary policy changes, all of that leads to just one thing: the future of the US dollar, how debt is going to be managed, and what it means for the global financial system. So here's what we're going to talk about in this video, step by step. We'll break down what is being said by Russia and why it matters, right? We're going to look at the US national debt and how the government manages that debt. We're also going to talk about the Genius Act, gold revaluation, and the idea of a strategic Bitcoin reserve. So I need you to pay attention for a second, because this affects your money, your future, and the economy in which you live in. The US government currently owes over $37 trillion. Yes, that is trillion with a T. And right now, that debt is not just a number. It is a problem that affects taxes, interest rates, the value of the dollar, and even prices of stuff that you buy every single day. Some people are panicking, talking about printing money, and even moving towards new ideas like gold and cryptocurrency to solve this big problem. And here's the thing: most people have no idea what this actually means. By the end of this video, you're going to understand how these plans could either boost the economy or create serious risk, and how you can make smarter choices with your money while all this is happening. Here's the problem in simple terms, right? The government collects taxes from all of us, money from your paycheck, your business, your side hustles, and then spends it on things like the military, healthcare, welfare, and infrastructure. But here's the kicker: the US government spends more money than it collects. For example, the US can collect $1,000 from you this month, but then spend $1,500. Now, multiply that by every hardworking American, and that is how we end up with a problem of overspending. In 2025, the US plans to collect around $5 trillion in taxes, but then spend $7 trillion. So, if they're collecting $5 trillion, but spending $7 trillion, then that is a $2 trillion difference they have to borrow to keep the government running. And all of this borrowing is creating interest obligations, basically money that you and I are paying so the government can manage its debt. So how are they covering that interest obligation? Traditionally, they borrow more money, right? But when that is not enough, they work with the Federal Reserve Bank to create money out of thin air simply by printing more money. And guess what happens next? Inflation. Think of it this way: what happens if I come to you to borrow $20, right? And then I go meet Sally and I tell Sally to go ahead and print me another $20 bill. Now I have two $20 bills, right? Then I come back 2 days later and say to you, here's your $20 back. You're going to be happy I paid you, but now there's an extra $20 bill floating around that Sally and I have printed. The prices of stuff goes up and the dollar loses its value, and everyday people are feeling it in their wallet. Now, when you go to Costco to buy their peanut butter covered pretzels, it is no longer just $20. Now they want $30 from you for the same item. That, my friend, is how inflation works. And that is why the government is now considering new solutions. Things that most Americans have not heard of, like gold revaluation, the Bitcoin reserve, and the Genius Act. Let's start with gold revaluation. Did you know that the US government literally sits on over 261 million ounces of gold? Yep, that is right. 261 million ounces just sitting there in storage. And here's the crazy part. On the official books, the government values the gold at around $42 per ounce, right? That's practically pocket change compared to what the gold is actually worth on the open market today, which is over $3,300 per ounce. So let's do some quick math to show you what this really means, right? The old value, right, of $42 times 261 million ounces equals $11 billion. Now, the new market value of $3,300 times 261 million ounces is equal to $860 billion. Let that sink in for a second. $860 billion. On paper, that's basically free money just for re-evaluating gold, right? It's not like they're digging up new gold or finding hidden vaults. All they're doing is updating the numbers. Simple as that. Here's how it works. The government gives the Federal Reserve a certificate showing that it owns this gold and what it is worth at the current market value. Think of the certificate like a gold-backed IOU. The Federal Reserve then in turn gives the government dollars by printing more money in exchange for that certificate. And here's the kicker. It is not a loan. The government doesn't have to really pay that money back technically. So when the government spends the money into the economy, the money circulates. People get paid. They spend money on goods and services. Businesses make profit. More tax revenue comes back into the government. The money can actually help shrink the national debt over time if the government wants. But are they doing that? A bombastic side eye. Now, I know what you're thinking. Fuanyi, this sounds amazing, but what if gold prices drop after this? What happens then? That is a great question, my friend. Gold doesn't stay at a constant value ever. It fluctuates based on global markets, investor confidence, as well as inflation and geopolitical tensions as well. If the price drops significantly, the Fed could be holding a certificate that is not worth anything at all. Technically, it could be a worthless IOU, which can impact the entire strategy. Now, let's talk about Bitcoin for a second. In March of 2025, the government signed an executive order that established a strategic Bitcoin reserve. Before you get excited and think that they're spending taxpayer money to buy Bitcoin, here is the trick. They're not buying new Bitcoin. Instead, they're taking Bitcoin that has been seized in crypto-related crimes, fraud, hacks, illegal exchanges, and then holding it as an investment asset. So, why does this matter? Well, Bitcoin, just like gold, can be leveraged as a financial tool as well. And here's how that works. The government assigns a value to the Bitcoin. For example, $100,000 per coin for accounting purposes. They can pledge that Bitcoin to the Federal Reserve, kind of like how they do with gold. The Federal Reserve can then provide spending money by printing it based on the value of that seized Bitcoin. And of course, there's risk involved with everything, right? Bitcoin is much more volatile than gold. Its price can swing widely in hours or days. So if Bitcoin crashes, the Fed's balance sheet looks weaker, which can ripple out into higher inflation, a weaker dollar, and even reduced confidence in the US's financial stability. Think of it this way, right? It's like having a rare collectible. You don't have to sell that to benefit from that value. You can use the value as leverage, right? And in the case of Bitcoin, that leverage can help create jobs, fund infrastructure, and even inject cash into communities. But if Bitcoin crashes or loses significant value, it weakens the US dollar and creates panic and doom and gloom. The third piece of this puzzle is the Genius Act, which was signed into law in July of 2025. Now, this law gives the US government the authority to create stablecoins that are backed by real assets like gold or Bitcoin, right? So, what exactly is a stablecoin? Think of it as a digital dollar tied to real value, right? Unlike regular cryptocurrency, stablecoin actually holds consistent purchasing power, right? Because it is pegged to something tangible like gold, Bitcoin, and even real estate as well. As exciting as this sounds, it is still very theoretical. Experts are trying to figure this out, right? How these stablecoins are going to operate, how people are going to trust them, how banks are going to integrate them, and how their value is going to respond to asset fluctuation as well. And yes, there are plenty of risks. If gold prices drop, gold-backed stablecoin loses value. If Bitcoin drops, Bitcoin-backed stablecoins drop. If the public loses confidence, then stablecoins could lose credibility very fast. Despite the risk, the Genius Act actually represents a very bold, forward-thinking approach. Whether it succeeds or fails, the world is watching. We're all watching closely. Now, let's focus on you, right? I know you probably came for Bitcoin, Russia, or Trump, but you stayed for what this actually means for your wallet, your investments, and your overall financial strategy. Because yes, government moves with gold, Bitcoin, and stablecoins might sound abstract at the moment, but they impact you more than you realize. Diversification is your first and most important strategy, right? Before I say another word, I am not a financial advisor whatsoever. So here's how you're going to diversify and take action. Invest in gold or precious metal, right? Gold often rises when inflation increases or when markets get shaky. You can buy physical gold ETFs, or gold-backed accounts as well. You can also include cryptocurrency carefully. Bitcoin and other digital assets are very volatile. So start small and treat it as high risk, high rewards, and don't invest money that you cannot afford to lose. I'm going to say that again. Don't invest money that you cannot afford to lose. Also consider real estate, right? Like owning property, because it provides tangible assets that are going to appreciate over time. Rental properties can generate real income for you. You can also invest in stocks, because small investments in diversified stock funds or ETFs can grow over time and give you exposure to the broader economy as well. Go ahead and mix it up, right? Don't put all your money into just one type of asset. Some perform better under different economic conditions. Review your investments and see if you are overly concentrated in just one area, right? Small adjustments like adding gold, real estate, or diversifying stocks as well can reduce risk and make your money more resilient. And secondly, understand big trends as well, like inflation, right? Government debt, Federal Reserve policies, interest rates, mortgage rates. When the Fed prints money or the government pledges assets, it ripples through everything, right? From your groceries to your investments. Okay, here's what you want to do as well. Stay informed. Most people are going through life oblivious to what is going behind the scenes. Learning, reading, and understanding is going to allow you to diversify your portfolio and also invest in assets that have real value and take advantage of unseen opportunities as well. And finally, think strategically, right? Government experiments with new ways to handle debt all the time. And whether they succeed or fail, your money is affected, right? Whether directly or indirectly. By paying attention and diversifying and understanding policies, you are protecting your wealth, and it can even grow it while others are busy panicking. This is not just politics or economic theory, right? This is real money, real assets, and real opportunities for you. Approach it smartly, and you can turn chaos into your advantage. If you want more insights like this that are breaking down government actions, investing strategies, or ways to protect and grow your money, then make sure that you subscribe and hit that like button as well. Share this video with your friends, family, and anyone who wants to understand what is happening behind the scenes with the economy, gold, Bitcoin, and government policies as well. Listen, knowledge is power. The more you understand, the smarter your financial decisions are going to be. So stay ahead of the curve by subscribing, liking, and sharing. And always remember that the best time to invest in yourself was yesterday. The second best time is now. You got this.